Okay, so cash flows from investing activities. Investing activities, remember, include cash inflows and outflows related to changes in companies' long-term assets. Most of what we're talking about here is going to be fixed assets, but any long-term assets really. So things that don't necessarily have to do with net income directly usually. So those would be our investing activities. So this is Rundle Incorporated. We use this for all the operating, investing, and financing. So when we look at long-term fixed assets, we start kind of here with land. As you can see, from 2007, 2008, our land went from $125,000 to $80,000, so it declined by $80,000. It also gives us additional information in the book that says that a June 8th transaction is a sale of the land with a cost of $60,000 for $72,000 in cash for the proceeds. So we have $72,000 in cash that we received from the sale. So that would be a cash flow from an investing activity for receiving cash for $72,000 for the cost of land. So that'd be an increase of $72,000. On October 12th, we purchased land for cash of $15,000. That would be a cash outflow. So overall, what this represents, we have a cash inflow. So and by the way, those two things make up the entire difference of the $45,000 that we had for a change, $45,000 decrease. So we have cash received from sale for $72,000. So that's a cash inflow. And then we had a $15,000 cash outflow. I'll make that one negative. Cash outflow. Negative numbers usually represent an outflow in cash. So that's one line on the investing activities. The other thing is that we have the building account, another fixed asset with the building account here that went from $200,000 in 20Y7, I'll say 2007 or 17 to 2018, 200,000 to 260,000. So the purchase of the building for cash, the overall depreciation would generally go, the accumulated depreciation would generally go down. But in this case, it went up. And so the building amount also went from 200,000 to 260,000. And that was a result of the purchase of a building for cash, for a cash outflow of $60,000. Again, this goes in the investing activities, and this is cash paid for the purchase of a building. And we also have a credit and accumulated depreciation account, which represents the depreciation expense for the year of $7,000. But remember, that would have been over in the operating activities instead. So that gives us our overall difference in our investing activities of $3,000. So we had a cash inflow of 72, cash outflow of 15, and then a cash outflow of $60,000, which gives us the total cash flow from investing activities. It's going to be the sum of those three numbers, which is $3,000. So we have a total cash outflow from investing of $3,000 overall. And that's it. We'll move on to financing activities next.